Welcome to StockOdds Odds and End podcast. This is Dave and Rob with our Saturday night special, I guess. Rob, how's it going?
Yeah. We're getting it in before midnight, so that's good, right?
A couple minutes before midnight. Still counts. Yeah, we're coming up on the last week of August. Things should be picking up, right? So, what do you got for us tonight?
Well, what do you got for us tonight?
I got a couple slides. I got a couple slides in there.
So we've got Fridays and the week's performance here. So consumer cyclical really performed well on Friday, and actually for the whole week it comes out on top. And energy came through Friday, but it was you could see had only a slight bounce, but the rest of the week wasn't doing very well. Technology came in third place on Friday and second place for the week. And communication services. So these three right here are our risk-on sectors that we use predominantly. Not to say that real estate can't be risk-on, basic materials can't be risk-on. They of course they can be. Utilities generally not. Healthcare, can be. The biotech space can certainly be more risk-on, but big pharma generally not so much, more defensive. Industrials can be kind of both ways. I mean, depends on what's going on, but we use it for our risk off. Financials could be both ways. And consumer defensive is obviously, as the name suggests, defensive. So the three that we have for risk off are defensive, industrials, and healthcare. So you can see right there that for the week, risk on, should have performed the best, and risk off performed the worst. But there was a couple days in the week where risk off really performed well. So it wasn't all bad, and I think that's a testimony to some of the quantitative data that even if we're not, super concentrated into these sectors, the ones that we're selecting down here are still pulling pretty well. That's my observation, is that the sector can really help boost performance. Let me give you an example. If you were to choose the right sectors, say 60% of the time, you would be above the benchmark for what we have as the neutral. The neutral benchmark that we have is 0.1% return on capital per day. If you could allocate capital more appropriately into only the right sectors and not into the sectors that are non-performing, you would boost it above that, right? Even if you only were right 60% of the time, you would still have a boost. So the goal is to get better and better at identifying, first of all, how to run a good, solid quantitative approach where you're not adding a lot of discretion. You're, lowering variance by having one long and one short in each sector, 11 sectors, 11 longs, 11 shorts. And then you can take the next approach. So that's the first place to start. The next approach is, can we press a sector? Can we take advantage of a market gap, right? I have to stress this, that it is possible to improve your results by paying attention to certain things that have actually been in the markets since the inception, right? Certainly, longer than I've been trading and being involved in the markets. But even at that, I've witnessed it over the last 25 years, the same thing. And that is, I'll show you, and when we look at the 15-minute chart here in a moment, we'll comment on a few of these things. We'll talk about exactly what to pay attention to that can really help you boost your results. So here's the 15-minute chart. So this was this week, starting here on the 21st for the SPY. We opened up a little bit after the Friday expiration day, which was kind of sideways here and up. we often look for a bit of a change after expiration, which we did get. Expiration week was down, and then when we came in here, we're basically moving up. So that's kind of the change that we often look for. We knew that this week itself didn't have any seasonality, so it was kind of like, well, let's see how the week plays out so we can have more information for the following week. But seasonality for the last 5 days did start on Friday, and because it's split by the weekend, I don't put a huge amount of weight on it. So we have 4 days left of seasonality, Monday through Thursday, and a few other things to talk about this week as well. But let's just look at the NVIDIA earnings impact that we had. After hours, NVIDIA shot up to well over $500 a share, and it had some volatility. It started to pull back, and then it rallied again. And then in the pre-market the next day, it was still fairly elevated, but it started sliding a bit before the open. But once it opened, it came ripping down pretty quick. So the elevated element of the market was largely caused by NVIDIA's earnings, which were obviously robust and cause people to want to pay up for it, right? But there was a lot of retracement in NVIDIA in these last 2 days. Now, it was still up 6% for the week, but it did pull back. And we could take a look at NVIDIA. Let me just grab that while we're speaking about it here. 1 sec, I'll pull it over because I think it's worth looking at. So let's put a 5-minute chart here for just these last few days here. So this is the earnings announcement, which happened about 20 minutes after the close and shot up. You can see the premium that it had, and then even the next day in the pre-market was holding, but you can see that it was starting to slide a little bit, right? So that's a good tell. And then we have this move right out of the open and sliding all the way down to finally close the gap by the end of the day. The gap being from the previous close, this opening gap closed back down to the previous close by the end of the day. And then the next day dropped again, which was Friday. So there's a lot of money to be made with the excesses that go on. And I mean, we can't really figure out who's all involved in paying these excesses, but obviously somebody's paying it or it wouldn't be up there like that. You have to have a buyer and a seller. So somebody's paying it, but these excesses provide a lot of opportunity. And yet they're the very thing that people are scared to do. And they're the most rewarding. And it's always been that way, you know. So if we go look at back to our thing, same thing happened with when Powell was speaking at Jackson Hole. Initially, it rallied the market, spiked it right up, and right away it started to sell off again and went all the way down below the previous close of that day, or the previous close of the day before, and then rallied back finally to tag that intraday high again. But it was like there was such a massive spike with very little volume that the opportunity to fade that or to step in on the lower highs as it was coming back down was quite impactful there. So let's look at our chart again here for the SPY, or just that 1 day. You'll see what I'm talking about here. So this was Friday. So you can see he started speaking at 10 a.m. and it popped up, pulled back, went higher, and then all the way down. Now there was nothing new said, in my opinion. it was more a rehashment of the previous FOMC meeting and Q&A period. There was an attempt to be a bit more hawkish in the sense of the narrative, but it didn't really stick, because by the end of the day, we were back up to, we went to tag that spike that we had when he first part of his speech. So my point is that there are these types of events on the upside and the downside that are very, what we call pivotal. They're pivotal events, and that volatility can give you tremendous opportunity. And so this happens on the daily, as we saw with, coming in with NVIDIA. And the fact is, the next day, after NVIDIA sliding, look how poorly all the mega caps did. I mean, I guess everybody said, well, if NVIDIA is going to give it up, we're going to give it up too. Ahead of that, who are we to stand if NVIDIA is going to give it up? So that's the kind of attitude that happened on Thursday, right after Wednesday's NVIDIA earnings, and there was tremendous follow through, tremendous opportunity there. So these are the hard trades to do on the daily and intraday, but they can be very rewarding. So just keep that in mind. Okay, back to our slideshow here. So yeah, that's about all we got listed on here that were the major things for the week. As far as the performance, I've got, sorry about that. It's got the ATRs and the price from the open and change, but I don't have the, here, let me grab it and pop it in there for a sec. I'll use yours, Dave, that you gave me here.
Sure.
Yeah, this one. Just do things on the fly here. Why not, eh? Okay, there we go. Like we said, it's late. We've been busy, but we want to get this done here. So performance for the week. We see the Qs 1.64, IWM minus 0.35, diamonds 0.47, and diamonds, that really reflects sort of the the move to the growth and large cap, mega cap stuff. And because you can see that, look at XLP for the week down. So all that defensive area. So the Dow usually gets hurt. And the thing is, IWM is kind of finicky either way. So sometimes when there's growth on the table and the mega caps are doing okay, then the Russell does well as well. But sometimes it just follows what the Dow's doing. It's kind of strange. But the SPY 0.79 and discretionary XLY 1.23 and communications XLC 0.49. So again, as we looked earlier, it's really about the risk on performance, and that's reflected in the map of the market as well. You can see the sectors this is for the week, not just for the day. NVIDIA did manage to pull through at 6.28% up. A lot of that was the pre-rally before even the earnings, because as we showed you, it gave it all up for the earnings. But it was rallying ahead of that. I think even in our neutral list, didn't we have NVIDIA for Wednesday before the earnings, right? So, and it was rallying for that Wednesday as well. So, I find it interesting, like AMD, down on its luck for the week, down 3%, but the other chips, hanging in there and doing pretty good. We can see banks were suffering a bit, and that's on the back of some of these downgrades that we've had from Moody's and also from Fitch. And there's a lot of concern for banking and insurance as well, and especially with all the natural disasters going on Insurance companies are, being scrutinized a lot more. Tesla helping the discretionary sector, as we saw, that was on top, came in, at 10.72% for the week. So it had a pretty outstanding week. We saw some problems in the consumer defensive, especially with, the Dollar Tree, Dollar General, Target, not having a good week, that's for sure. Earnings played into some of that as well. But anyway, just always good to check that, and worthwhile for even your own journals is to save a snapshot of the map of the market for the week, just to keep track of things like that, or put it in a spreadsheet or whatever. SPY versus RSP. So the SPY, the question I have was, are the FANGs or the Magnificent Seven still in charge? Or has something changed since the algorithm was changed for the NASDAQ 100? So are we seeing anything different, right, in their behavior and their performance? Are they still in charge? RSP is the equal weight for the S&P 500, which spreads the emphasis more over the mid caps and doesn't put all that weight just in the mega caps like you have in the SPY. So when we look at this, we go, how is the market really behaving? Is it really a broad based market rally, for example? So if the market was up for the week, was it broad based? Or is it still the leadership of, a handful of stocks? Well, this is a weekly chart. So that shows you for this week that we just had, the SPY beat out the RSP, correct?
Yep.
Which means that the mega caps are still in charge. And, we're not getting that broad market. We did have in a few of the previous weeks, and I think we commented on it a few times when we saw that a lot of other categories and stocks were participating that hadn't been before. But August is a very light volume month, and these last 2 weeks, any volume has gone into, the mega caps and the SPY versus, the RSP. So you can see what's happened there. So a very interesting chart to watch, as well as the next one. And this is the IVW versus IVE. This is a ratio chart, S&P 500 value versus growth. And again, I put a weekly here so we can look at, where have we come from? We sold off in 2022. 2023, we've been rallying. So that's what growth over value looks like so far. And we pulled back a little bit right at the end of, once we got in through July there and into August, and then we started to turn a little bit here off these last 2 weeks. So it looks like they wanted to pick up some growth again, and maybe that's what people like Kevin O'Leary are seeing in the markets, commenting about Michael Burry, about that his bet in terms of short position on the overall market is pretty risky. I don't know. I mean, it's hard to know what people's time frames are, right? It's hard to know exactly when they started, what strike prices they have if they're doing options, what's the duration. So it's, unless we have all of the details, it's hard to know.
And what is long the other side too, we don't know that.
Yeah, and it could be offset by something else. But we are coming into September, which is historically one of the worst performing months of the year. So in terms of seasonality, the timing might be okay. But what I'm looking at here is these 2 light volume weeks we've just had, which are the lightest of the year historically. It looks like growth was beating value, right? So if this chart moves up, that means growth is outperforming value, and if it moves down, growth is selling off compared to value, and that's what really happened in 2022, right?
Yeah.
Okay. Seasonality for ETFs. This is the last 5 days, which started on Friday, but we're putting emphasis on the next 2 to 3 days for sure. Dave, what do you see here on the seasonality? I should flip this back to a slideshow here. Hold on.
Yeah. Well, in terms of the ETFs, we see a lot of the risk on high beta stuff as being stronger than the more stable stuff. So even things like China, the K-Web, we've got the RKK funds, biotech, XBI, and a little bit of gold. But then the things that are weaker are the basic materials, oil, XLB, the industrials, financials. So it's more of a high beta play for the last 5 days and last trading day of the month as well. And some of the individual stocks, they just confirm exactly what we saw there.
Here's this.
Yeah. Again, like on China, there's like PDD. We've got Tesla long, Lulu, which also has earnings this week. Run, which is a solar stock. Gilead, which is in biotechs. And some of the softer things are Mosaic, X for steel, Wells Fargo for financials, NXPI for chips. So it's really a higher beta play, NASDAQ kind of stuff on the long side for the last couple of days. And of that last 5 days, the first 2 of those, so that would be Friday and tomorrow, are even more robust than the final 3. And then coming into Friday, that's expected to be lighter as well.
Right. Well, we kind of tried to, bounce back up and have a bit of a positive performance for Friday, but it wasn't outstanding. So maybe it'll kick in for Monday and Tuesday. We could be looking at that.
Yeah.
So check your overnight, your futures there on Sunday night, see what they're doing. Check pre-market, see if you can get a glimpse of this higher beta risk on type play. Speaking of China, you mentioned PDD. There's been a lot of volatility in the stocks recently, and there is a lot of debate concerning China. So there's stimulus and reopening, and just to some degree, like could be pressure on oil, could be pressure on a lot of things. But one of the other things is it could also be a perfect storm with the real estate and all the other stuff that's going on. That China's got some serious problems. So I think the jury's out. The debate is on, and China's stocks have been quite volatile. So just you can always do this if you want when you're trading, is just remove classification. Like if you don't want any exposure to China, then just remove those stocks. You're doing using
one nuance to that. So if you look at PDD, it shows up now as an Ireland stock. So maybe they changed some. So
that's right. That one, yeah.
Yeah, when you try to eliminate Chinese stock, that one still pops in there because it's labeled as Ireland.
Right.
Clever way to not get excluded.
True. Yeah, good point. If they move their domicile. So ETFs and stocks, right? And so this is a to-do list for you guys out there in Radio Land. Go to Seasonality Almanac, look up the last trading day of the month for August, and look at the ETFs and the stocks. So the last trading day of the month is on Thursday. And then the first trading day of the month for September is on Friday. But it's also the first Friday of the month for September. So look up both of those and see what you come up with in terms of ETFs and stocks. And the goal here is as we mentioned before on this program, you want to find things that have a bullish tendency or a bearish tendency, and you want the ETFs as the context, and then find the best symbols within those ETFs so that there's a match there. So if it says that XLE is going to be positive, then you want to find really good stocks that are members of the XLE or in the energy complex, right? And that's the way to do it. And then the one more thing is you want to find things that are discounted if they're coming into a bullish window. So if energy's been not performing very well or lagging the rest of the things, and it's coming into a bullish season, then pay attention to that, because if you pick up some good stocks long, according to seasonality, you probably are going to do okay because you're already coming from a discounted perspective. So that's the trick there. Economic calendar.
Yeah, so the themes for the week are housing data and employment. So Tuesday we have the Case-Shiller Home Price Index and job openings. On Wednesday we have an ADP employment report and pending home sales. Thursday, again, some initial jobless claims data, personal income and spending, PCE. So that's going to be more of inflation data. And Friday, a bigger one is U.S. non-farm payrolls and unemployment rate. So the thing is that wages have been very sticky in terms of they're staying high, they're not coming down much, and that is a cause of inflation. So if these were to suddenly tick up in terms of causing inflation, I mean, payroll suddenly, really it's about inflation. So that's the theme for employment, and that combined with Powell's statements last week could either drive the market further down or it's going to give us some flavor as to inflation for the next possible Fed hikes.
Exactly. That's the takeaway from pretty much all these reports this week is going to be, because we didn't, at Jackson Hole, we didn't really hear anything different than what's already been out there. And yet we still have this tension because the market would not have rallied on any of his good bullet points and then sold off on some of his hawkish bullet points if we weren't concerned about inflation and more interest rate hikes. Like, why wouldn't the market just stay doing what it's doing? I mean, stay flat. Why did the market even move at all? And not only that, if you look at the 10-year note, the 10-year yield hit a high when the market hit a low, right? And then you get your reversal from that, and the yield came back down and the market rallied. So there wouldn't be those moves if there was nobody listening and nobody cared, right? Now, it could be algorithmic, meaning it picks up keywords and acts like bananas, right? It could be, just natural language processing, and the algos pick it up and go on a couple keywords. It can happen.
Hallucination.
Yeah, Chat GPT hallucinations too. But yeah, so this is a week where we do have a lot of employment information to digest, and it happens to hit just before September. And like I said, September is one of those interesting months. We don't really get the ball rolling even in the first week of Labor Day to the same extent as the second full week of September. And then it happens pretty quick. You can have trends, and you can have people put a little bit more weight into analysts, upgrades and downgrades. It just happens because you're coming back from the summer, and it's like, well, does anybody have any information? Who knows something? And so somebody says something, and people put a lot more stock into it. But anyway, I think we can call that a wrap. And thank you again for your time, Dave.
The last thing is there's a couple earnings this week.
Right. Yeah, we got a few earnings. Yeah, go ahead.
The noteworthy ones are Dell on Thursday. Which we got? Tuesday we have Salesforce, and then Thursday's Dell and Lululemon. So computers, yoga pants, and CRMs.
I hear you. All right.
All right. Thanks.
Well, thank you for your time, and have a good one.
Good luck. Bye.